How are we this morning?
Good. How are you?
Awesome.
Very good. Had dinner at Aaron and Marin's new place last night. Thank you, team.
That was awesome having you guys over. That was a lot of fun.
It was learning all the red meat I eat isn't good. Ash Marin gave us a download of a few bits and pieces.
Like what?
So, Mara's been talking to ChatGPT too much. So we
Yeah.
are now rationed on our red meat to the equivalent of like the size of a decent steak a week,
Hell no.
which for some people might sound totally fine, but I'm a metasaurus.
So one of the things that came up, I don't know how we even got there, but what sitcom is your relationship? Ash, what do you think? What sitcom would best represent your relationship?
I don't really watch.
Have a bit of a think. What was yours, Aaron? Did you end up with one?
Well, Brady Bunch was an obvious one.
Yes, that's right. That's the obvious.
Yeah. But I can see elements of some other series. I think Extended Family is Seinfeld.
But then who's George Costanza?
I'm George at times. I think there's also part of my family which is a bit like Succession. Yeah.
Well, and I think when you're trying to get a first fund up, there's a greater than zero chance we end up as Breaking Bad.
Yeah, it's that. Let's hope it ends up a bit more like Billions. But
Well, Ash, it was discussed that potentially my relationship is that Everybody Loves Raymond, with the somewhat dim-witted husband, the more rational wife, the big brother who's a tall lunatic. I do think I'm probably closer to Curb Your Enthusiasm, though, given some of the challenges that I seem to get myself into, and that inevitably has my wife shaking her head.
I haven't seen either of those, so
You haven't seen Curb Your Enthusiasm?
no.
I can see that one.
Yeah. All right. By the end of the episode,
I don't really
Ash.
watch sitcoms. Like, give me some examples.
Well, even a series on Netflix. Is there a series?
Trying to think of some of our favorite listeners. Like, would that be offensive or funny if we said, hey?
Well, luckily both. Can't be funny without a little bit of offense, can it?
Well, I don't know where Jack is.
He's always 5 minutes late on whatever you say you're 5 minutes late.
He's like Pavlov's dog. He's learnt, has he?
Yep.
Well, while we're waiting for him, anything cool happen this week, Ash?
I have been just head down, grinding, absolutely grinding this week. Lots of moving parts. I've been playing around with co-work. I don't know if I was talking
the
about
new
that
Claude
last week. Claude so
co-work.
I sent them a message, essentially like begging to be taken off the wait list so I could try it. And like 12 hours later, they like turned it on for me. So I must have been somewhat persuasive, or they just felt sorry for me.
And what do you think?
I wrote a LinkedIn post on it. I have actually been using Claude Code probably more than co-work. But in saying that, I'm also running both of them at the same time and chewing through my credits, at least within the hour.
Would it be fair to say like co-work is designed for a Neanderthal like me?
Well, it's designed for me, like a non-technical person who wants to have agentic workflow that likes pretty UI. Like my immediate things when Claude Code came out was like, oh, the terminal is so ugly. And I don't like not being able to fully grasp everything it's telling me. But as soon as I got out of my own way and broke through that intimidation and fear of I'm not good enough, like I don't understand everything, and just went, you know what, I'm just going to tell it I don't understand it if I don't understand what it says. And I'll just be like, can you break that down? Remember, I'm non-technical. And then it's very clear and I can follow all the instructions and it does a very good job. They both have places in my workflow now alongside another 8 tools. But I will say my computer battery is getting very it's gone within an hour. I've got so many things running now.
It chews through it.
It chews through it.
Well, the discussion on Replit last week, I had a lot of messages, more messages than normal on a few things, and it has actually inspired some listeners to go out and start practicing. And then they shared some of the stuff that they were building. And there were some people that I assumed were like well ahead that have only just started in this place. But like, to me, I think the world's going to bifurcate, like, understands this exists, has curiosity, starting early, and then has some level of capital to turn these ideas into something real. Like, I think that's one chunk of the world. And then there's the chunk of the world that's either too scared or doesn't know that this exists. I think that's the majority, and I think the majority are going to be pretty fucked. I think it's going to bifurcate pretty quick.
Totally agree. Like, I think I see it with my parents where they're that head in the sand. And look, with their generation, they might escape it with no consequence. But I definitely see bifurcation on the knowledge base and then bifurcation on outcomes and impact.
Well, Dave from Venue Now, he listened to the part where I was talking about my inefficiency, and he shared this, which I thought I'd share with others. Using Whisperflow, that's a lie. It didn't actually start with that, Ash. I just added that in. He said, talk through your requirements and objectives with Gemini or Chat or whatever, especially if it's something quite technical you're trying to build. Then get whatever you've spoken to write a product requirements document for version 1 with your Chat, focusing on writing the requirements for a developer. Then copy and paste that into a Google Doc and then download it as a markdown file. Then upload that to Replit and ask it to read it carefully to implement the features. Make sure you have testing toggled on and usually have the agent set on high autonomy. Then the agent and architect will test rigorously against your product requirements doc. Ask Replit to create an MD file that explains the features and architecture for a developer to understand and a product manager to communicate internally to their team. If you want to add new features, download the MD from Replit and discuss it again. Then attach the latest documentation. I'd like to add XYZ features. Please write a product requirements document for the latest version. Then repeat. He says, I found this works insanely well. Replit then one-shots mostly what I want done each time. If you have any bugs in Replit, then firstly ask it to add detailed console logs. First ask it to add detailed console logs if you haven't already. And then secondly, say, please see the console logs. I'm experiencing X bugs, and then review it carefully. In that way, you're creating something that is most likely a developer can take and run with, rather than having to redo it from scratch, which is obviously the conversation we were having. So I thought that might be helpful for those early in their journey. And make sure you use Whisperflow and not your fingers like an idiot.
See, Ash, he does listen. He might not be doing the things he's saying.
Exactly. I'm like, listen, implement, return on investment.
But that's good. I like that as a workflow.
Now, also, I've unsubscribed from ChatGPT, and
Wow.
I'm going with Gemini.
That's a quick move.
Well, a couple of reasons. Like, in our Pro account, Gemini's in there, and then it's got access to all of my stuff, which I hadn't appreciated before. So I'm actually now able to ask it questions that I was not able to ask Chat unless I created an entire new knowledge base. And then I've found Gemini far more functional for some of the stuff. So we got a 40-page document from Burgess Rawson, which is a real estate agent that has a big childcare sector, and it has a little tile with a picture of the childcare, has what the yield was, what the per place rent was, but it's all in like this picture form. I uploaded it and got it to turn it into a table that I could then play with. Told it to check its results, and it perfectly got it. And in fact, even said row 26, the tenant name appears as Embark in the image, but that's likely a typo for Embark, but I've transcribed it as it appears. Like even finding basic little stuff like that. And then I did the same with Chat, and it made mistakes. And so that's why I think one of the charts we've got later is Google's up 70% this year. I have a feeling Google's going to come from behind and be a much stronger contender in this race than what they were considered a little while ago.
I need to get back into Gemini. After your comment last night, I was using it a bit this morning. But this is the challenge. I feel like, Ash, we just got ChatGPT kind of set up for Tribe, and
but you just need to use them all.
Yeah,
it's my honest opinion. In the world we're in, for the different parts of how we all function, meaning our entire team is very adaptive, fast, scattered. Therefore, we can use multiple tools, and that enables you to use the best model for certain things. And I think for what we're using GPT for, I still think it's the best model for what we want to get out of it. For now, that could change.
Yep, I'm going to give Gemini more of a go and keep GPT there as well.
Well, the beauty is that it's not the strongest or the brightest. It's those that are most adaptable to change. And what I like is that gives me half a shot.
Yes.
Now, after, I think it was Claude Code got released, there are people that are talking about how that has started to really affect public market ARRs. I have a feeling that may be part of it, but more the likelihood of inflation returning, killing tech valuations is probably more to blame, but I don't particularly mind either way. But there was a post by Harry Stebbings that a number of people are referencing, which I think is true. The venture model doesn't work with current public market revenue multiples. Datadog's down 21%, Figma's down 20%, Wix is down 38%. Braze is at 2.5 ARR. Atlassian is at 4.8 times ARR. Klaviyo is at 4.5 times ARR. Venture doesn't work unless this changes. And I think it is a very interesting point because we invest in things at our level often at, you can't even calculate the ARR multiple on the basis that it can grow into something that the markets ahead of us start to value. But when the public markets are valuing things at this level, if you got in at too high a valuation, even a good business, if you can't exit properly, you might be in trouble.
Yeah, I look at this and I think it's like Buffett says, markets are short-term voting machines, right? And there's a lot happening in the world, and where is capital flowing? But this is kind of like the conversation we had last night, Don, over dinner around star signs. And then is there data in the fact that people believe star signs, so therefore they behave like their star sign, and then eventually the causality becomes true? I kind of feel like
I'm glad that Murren, that it was quite a tangent.
It was. But like, I think here, like if your exit strategy is an IPO, totally get it. But I also think that M&A activity tends to index off these valuations, and even some of the angel groups we know use public market multiples to inform their own valuation data. So I think this is where our system kind of indexes to something that isn't necessarily, at least for Australian companies, a primary exit vehicle. Like most Aussie companies tend to get acquired in a trade sale, some sort of M&A rather than a listing, as a liquidity event for an investor. So yeah, it's a weird quirk of our system. It doesn't work while we believe it doesn't work.
Well, I saw another post. It's picking like old world-ish companies that are trying to add AI rather than being AI first means that you're probably picking the wrong subset.
Yeah.
And a lot of this stuff is anchoring more to what is the growth rate of these companies and what are the things that are coming to attack their markets, I guess is, and it segueing into this conversation. Well, before we do that, afternoon, Jack, how are you?
Hey guys, sorry about that.
Hey, Jack.
But I do just, my 2 cents on that, Don, before we go to the next one, is like we're forgetting that there's also the fundamentals of the business. So yeah, you're always going to get a multiple, but if the fundamentals of the business are 100x, well, there's still a venture return there, as long as the multiple hasn't totally shit the bed.
Yep, 100%. And again, coming back to other conversations we've had, it's more important to concentrate on the size of the market and the scale this thing can get to than just concentrating on valuation alone. Otherwise, you're going to miss the boat.
Just for context, Tech One is trading at 15 to 16 times multiple. According
Yeah,
to
there you
Tim.
go. What's its current market cap? I think it's come back a little bit, hasn't it?
Jan, 9 billion has come back a bit.
Well, with the multiples partly being blamed on the likes of Claude Code, and what seems to have happened is it's caught a popular narrative that, oh, hang on a minute, finally we can just one shot, rebuild software using Claude Code, i.e. SaaS is dead. Another article in Capital Brief by Bronwyn Clune, her first article coming back this year, says, as AI tools spark a global SaaS sell-off, Australia's top VCs say their business model isn't dying, but it's being reshaped, repriced, and rebuilt for a new era. A sell-off in global stocks followed the release of Anthropic's Claude Code, sending a basket of software services tracked by Morgan Stanley to their worst start since 2022, even as broader equity markets remained at all-time highs. The source of this anxiety is agentic AI tools capable of reliably doing complex work that threatens the economics that made SaaS one of the most reliable growth sectors for a past decade. Now, it's a big article. There's a lot of stuff in there. Do a couple of comments. Michael Tolo, partner of Blackbird, frames the moment as a test of execution. The pace of technical progress in large language models has now been extraordinary. It's not just about SaaS. That's true of all companies right now. The successful ones will be those that can keep up, learn the fastest, with exceptional taste about where the technical progress will come over the next 6 months. That comes back to what we've spoken about before. If you four quadrant a founder, taste and execution, that top right, where they have both taste and execution, those are the ones that win. And under that is, building a culture that can, at the end of the day, react to change. And what does change create? It creates problems. But if you handle them properly, those are opportunities. And all you got to do is make decisions about what to do about those problems and opportunities, and then bloody implement them. And the trick is often to understand the conflicts as to why companies can't do that easily. And that's where we like to play. So all of this stuff still boils down to the same old stuff that's been true for a million years. It's just today, it's agentic coding.
Yeah, I agree with that bit. It's and timeframes are compressing. But one interesting thing I took from the article, so Ben Grabban, a partner at Side Stage Ventures, there's a quote there from him. We are investing heavily in differentiated AI opportunities, but also leaning into diversified portfolio of non-correlated, non-consensus areas such as health, consumer, creativity, and material science. And I think just picking up on like 1013's shift at the end of last year and some of the other VCs that are shifting away from traditional SaaS, they're starting to shift into these other areas where Australian VC may not typically play, like material science. It's fair to say most Aussie VCs wouldn't previously have played in that space. But we are seeing this shift. I think capital is going to flow to more adjacent type technologies rather than purely digital.
Is this now the appropriate time for us to announce we're launching a Tribe Honey Fund where we're going to buy
after the combo
honey
last night with bees with their virus, I think.
Yeah, so Ash and Jack, all my bees are dead, sadly, because Varroa.
Jack and Ash are not so surprised by that statement.
Yeah. But this time, it's seriously not my fault. It's not like the bloody alpacas. It's not like the alpacas. It's not like the cow. There's this little mite called Varroa, and it comes in and attacks the hive, makes the hive weak, kills bees, and then the small hive beetle comes in. And it's foreign to this country. And I should have brought my card. I'm now a member of the Bayside Beekeeping Association. I have a paid membership that gives me the rights to attend meetings, vote on meetings. I can join the committee if I like.
You had to pay to be a part of this. You weren't asked.
Oh, look, you apply and there's like a membership committee, and Darren comes and has a chat to you, and Sharon has to put you forward.
There's a card.
I love that it's Darren and Sharon.
I need to get the card because literally it actually,
did you
and its full
laminate
name, it's Donovan Gordon McKenzie, member of.
Do you have to show your card to enter the meetings?
No, don't be stupid. It's a secret handshake.
Is it laminated?
Yeah, no, it's like a little credit card.
Oh, I feel
anyway,
like
we digress.
Sit under your picture behind us. So
all our bees are dead. And there were some tears in this meeting. Like one poor old fellow, he had 20 hives and he's been doing it for 30 years, and 19 of his hives got destroyed in 2 weeks. And what's happening is this Varroa has now entered the country, but you can't really do anything about it because we have such feral bee populations that the Varroa is in the feral bees. The feral bees end up in your hive, spread the Varroa. So pretty well we're all fucked, and it's going to end up all over the country. And I think it's going to decimate Australia's honey production. So we're going to launch the Tribe Honey Fund, where I'm going to go around and buy tons and tons of honey, store it in containers at my place, and then at the right time, we're going to corner the market.
Or you could just come to South Australia and buy our honey where we are protected.
Oh no,
species.
it will be there soon.
But South Australia has this is why you can't bring honey into South Australia from other states.
No, but the bees will fly.
The bees don't take airplanes, Ash.
Yeah,
to
well,
Adelaide.
hopefully they don't make it. We're far enough away.
They will. I didn't realize. So when you actually plot, feral bees are everywhere. You don't realize it. Like little beehive here, a little beehive there, and they move, and they will be down in Adelaide soon. I can assure you. But anyway, I digress. Why are we talking about this? How did we get here, and how do we get back on track?
This is a Don thing. You just went there.
Can't remember, but I do like it. Honey as a story.
Oh no, okay, non-correlated. Non-correlated. Yes, investors are looking in the era of AI, but I think coming back to the core point, we've got to be careful with this idea of SaaS being dead. Well, no, SaaS isn't dead, and soon talking about AI will be like saying my product is cloud-based, but it's making it a lot harder. And there was a post that I saw by Ron Shanmar, who's the head of equities at Taman. He said the thesis at the moment that AI coding ability will kill most software and tech because Claude can write the code. Writing software is easy, but trying to sell it into large organizations is hard. I think the market sentiment is wrong. He's totally right. The only problem is it makes it a lot noisier. There's going to be a lot more competitors. But what is occurring is that products are now becoming super apps and adding more and more features. And what you're going to just start to see is this consolidation of functionality. I won't do it to you today, but I've even built a little tool in the board meeting this week called MOFO, multi-operational for family offices. No, managing operations of family offices. Because we've got property, childcare, venture. We've got so many different things. And then you've got to manage your tenant portfolio, and you've got to manage your venture stuff, and there's 37 entities, and it's all complex, and we've got it spread all over the system. So at the end of the board meeting, I said, hey, if we allocated some capital, do we think a tool like this would be helpful that actually handled everything? And I was a king among men. It was at one point, one of the GMs said, would you stop showing off now? We get it. You're clever. But this is the world we're heading into.
Does it have an emotional regulation module for the Patriot?
But we've got our rent roll management software. We've then got the stuff to manage the property development side. We then have the task management stuff. Then trusts that have been alive for 30 years often have 3 variations. And in the variations, there's different reasons. And that IP often gets lost. And so you try storing it in a SharePoint, you try storing it somewhere, but because you're trying to mold your business to suit the software, when people leave, institutional knowledge leaves as well. Whereas what this stuff is giving you the opportunity to do is build something exactly to your workflow that helps you perfectly. And if you've got the capital to then go and do it, then go and do it. And that, I think, is the exciting opportunity. And so, yes, Ron is not wrong, but I think you're going to have this explosion of stuff where it's going to get noisy and messy, and it's going to be hard to cut through.
I totally agree with that. I think that line in there, Don, businesses molding to the software application. Mara and I were chatting about this morning. She's spinning up these sales workshops and unpacking different businesses, and they have these dysfunctional sales processes and funnels, but partly because they've adapted to the system and the constraints of the system that they're using. Whereas I can see in the future that the small and medium enterprise level, completely bespoke apps developed for themselves. Whereas I see the larger end, like enterprise market, maybe being more likely to adopt other technologies. But I think there will be, I know that the next kind of thing in the agenda is this looking at defensibility, but I think where does the value truly accrue in what's going to be a very noisy market, and how do you stand out and get cut through on distribution in that?
You are assuming that value has to accrue. You might be right.
That's a great point.
I'm just saying that, like, who says that? Yeah.
No, it could be totally eroded. I totally agree. I think that that's a very real possibility.
Look, just quickly, I can't help myself. Let me just mainly because Ash has been like too positive so far. So I need you to chop me down a peg. Because one of the big issues, so I've built AI search into this. So one of the big issues, we've got all these entities, and then we have all sorts of different assets by type. There's the property development ones, commercial properties, residential property, childcare property, venture capital, you keep going. And the problem is for a family office is that, let's say for the venture capital assets, that's fine, but often they're owned by different entities. Some will be in one entity, some will be in another entity, and understanding some of those things and tracking that can be difficult. And then tracking all of the documentation and the updates and everything that have come in by that. And so the ability to sort of manage it in that way. And then with tenants, one of the challenges when you run your own portfolio is sort of, you got your arrears you're constantly chasing, but then you've got your lease renewals. Like, when are they coming up? And it's not just a matter of when is it coming up. It's sort of every lease often has a different time where they have to notify you if they want to extend. And if they don't, there are certain rights. And if they do, there are certain rights. And if we as the landlord miss that, we could cost ourselves hundreds of thousands of dollars. And often that is not understood. Our corporate calendar is all over the shop. So being able to say, okay, these are where we've got to do every corporate bit. And here's the calendar of the different things and what's overdue and who's accountable for what. And even meetings can be a dysfunctional nightmare because you end up all over the map. So being able to have a process where you create your own agenda based on the specific items that are in train. And then when you discuss something, you can then create a task, and that then goes straight into the task system. So then that way you can actually collaborate together, see your Gantt charts, blah, blah, blah. Like that, we're making this to suit us, not us try and suit the rest of the world. And then at the top level, you can start to have a little bit more trust, because when a new property manager comes on, we actually have follow the bouncing ball, and there can be a little module on this lease is coming up, and this one only has a 30-day notice period compared to everybody else. So we have to be all over that one and get the agent onto it, because if we miss that window, we could have a vacancy. Like, this is the new world that's open to us.
Are you going to edit that out?
I'll put a black over it.
Okay, just checking. Some sensitive data in there, Don.
Oh, it's mostly fake. Like me with all of my tasks up to date. Like no overdue, outstanding tasks for Don. Like,
never.
Lol.
How many unread text messages do you have right now?
So we had this conversation in the meeting the other day. How many do you have, Ash?
0.
Okay. So I have 858.
Stupid. Oh my Lord.
How many in your email box on your phone? What is the number, each of you, for unread emails?
Currently 4, because they've come in since we started.
Aaron?
60.
And
Two
what an
SMS
embarrassment.
which have come in just recently, and 60.
What an embarrassment. Jack?
Mine's 82, but I archived all of last year, so I started with 0, and then in 22 days.
Email bankruptcy. Delete.
Oh.
Okay.
No,
mine
Don,
is.
No. Oh.
Have a guess, Ash. Have a guess. Just have a guess. Let's have some fun with this. Let's have some fun.
1,298.
No, I reckon more than 15,000.
I reckon like 32,000.
Oh.
Yeah. All of you are wrong. 153,328. But here's the thing, though. that's not really true and fair. I should do a better job of deleting all of the crap, like SEMrush and the Airtable team and
Oh my
Free
God.
Pick team
Can
and
we
11 Labs.
please just implement an email triage? You're like actually making me so anxious. Like, how do you know you're not missing important shit that like could be an opportunity that like is just sitting there and you might have missed it, and then we might have filled the fund by now. Like, you don't know.
Have you sent me an email and that I've not replied?
Yeah, multiple.
Oh, bullshit. When? Give me an example.
You really want me to go back through all my emails?
I'd just like you to give me one example, because I think what happens is people make up unfair stories about other people.
Okay.
Aaron, why are you laughing? Jack's like...
Because that sounds like the start of a TLC session.
I either go through and delete them on a daily basis, or
I'm too busy working to do that.
I have an AI agent that understands what's important and archives them into folders. And then I go through and it understands that like this is important and it drafts responses for me. And I'm amazed how well you function. Like, don't get me wrong. Like, you do so much in the amount of hours that you like functionally work and are across so many things.
But that's the thing, like volume multiplied by quality of activity, like there will be stuff that gets missed.
Totally. But that's why like I'm obsessive with my email, because I know I'm scattered. And like I use that as like a way to keep myself accountable for not dropping balls.
Ash, as a subscriber to the concept of shadow and golden shadow, the angst within me
I don't know what that is, but
about talking about that means that it is something I should look into, and I will make a time with you to help me with it.
Okay, great. I'd love to help you solve that problem. Let's do it.
My more recent approach to life is the George Costanza, just do the opposite of my impulse. So if someone's telling me to do something that I immediately reject, that is the thing that I should be doing. So I will organise some time.
What sitcom is that from?
Seinfeld.
Like the one and only.
God, this intergenerational gap is very, very difficult.
I wasn't allowed to watch it, so I don't know the characters. Jack, we started the session with saying, which sitcom do you think your relationship's like? And I was like, I don't really know that many sitcoms. Like, all that come to mind is like Suits, The Good Wife, Madam Secretary. I'm like, I don't want any of those.
Come on, Jack, what's yours?
I'm going to be honest. I don't even know what sitcom was. I just searched it up. I've got no idea about movies.
I was like, I don't know. Can you give me some examples? And Aaron's like, Netflix. And I was like, okay.
I haven't watched. I don't think I've watched Netflix since Louis been here. Like over a year. I haven't even opened the app.
Yeah.
That is highly functional. Libby and I get maybe 20 minutes a night. We've started watching Armageddon, that stupid movie from the 2000s, and we essentially get 20 minutes a night before we fade out. And so we think we're going to finish it in about 3 days from now.
Okay.
All right.
I've just Googled relationship sitcoms and got nothing. I'll ask Tim. He might know. Let me text him.
Say you were going to ask some AI agent.
Yeah. Ask Tim.
No. So, you've met him, so you know he's real, Jack.
Before Ash has even finished the
any
sentence,
AI.
Tim yells, Shawshank Redemption, which for Ash and Jack is about a guy imprisoned. Anyway, moving right along. So the segue, I think, rather than just targeting some old school companies and saying, oh, look at that, all of SaaS is down, it's more like, actually, well, what's the future looking like? And there was a post by Peter Walker of Carter, and the headline is More Money into Fewer Startups. And what Peter says, more money is flowing into VC-backed startups, so why does everyone feel so damn uneasy? Because it's going into fewer companies. There's more money, but fewer startups, and that means anxiety. The graph below shows the total dollars invested into US startups on Carter versus the primary rounds. Money is up over 130% in the last 2 years, but rounds per quarter is only up 3%. And so I think a bit like the public market ARRs, and given so many companies are staying private for longer, the money's just going to the New World Order. And that's not the SaaS is dead. It's like this New World Order SaaS is where the life is at. Old SaaS that's not defendable, yeah, you're probably dead.
Yeah, that the line though, what was it? Need to build castles now to protect our data, not moats to protect the business. That doesn't sit right with me. I think this plays into our thesis, right? Like IoT, which feels wrong to still call it IoT in this world. It seems like 1980s technology, but really, if you think of it as a proprietary data engine that's ingested into AI to develop a compute multiplier that's differentiated, in that sense, building castles around your data, there's this physical layer of infrastructure that's generating a new proprietary data set to feed the world of AI. So to that, I guess that line plays true. But yeah, overall, with the rest of what he's saying, it makes sense.
So I'm a bit distracted. I got a text from someone in the property side that's saying, "Hey Don, just following up on that email I sent you yesterday." So that fucks the conversation a little bit. I will get back to them. I just may not be as quick. Jack, Ash, anything on this one? Yeah, I think it's that sort of quality is sucking up all the dollars, and that's why you've got to be going to where the puck is going rather than whatever the opposite is of going where the puck is not going. Now, that's going to make speed more important, which comes back to what the dude from Blackbird was saying. And Sam Kathari, co-founder of Everlab, did a post yesterday, I think, hire slow, fire fast. Every founder knows the saying, but very few actually do it. And we've discussed this a few times on this podcast. Hiring slow part, sure, we try. Multiple interviews, reference checks, case studies, work trials. But firing fast, that's where it falls apart. In practice, it feels brutal. You can second guess yourself. Maybe they need more time. Maybe I haven't been clear enough. Maybe it's my fault for not onboarding you properly. Hang on, my son here. Hey, Jack, I'm in the middle of a podcast episode, buddy.
I got 24 cars.
You got 24 cars. That is awesome. What type of cars?
I don't know.
Okay. Love you, buddy. He's got 24 cars. I learned a lesson the hard way at Airwallex after recruiting 100 plus people and interviewing even more. This is why Everlab, we run formal check-ins at 30 days, 90 days, 6 months, not optional. Not when we get the chance. Scheduled, constructed, documented. At 30 days, we're asking, are they settled in? Do they understand the role? Are there early signs, good or bad, that we should be paying attention to? At 90 days, we get specific. Are they meeting expectations? Where are the gaps? Where do they need support? This is where issues become visible if you're paying attention. At 6 months, there should be no surprises. The conversation is a confirmation of what we've already discussed. Fire fast doesn't mean being ruthless. It means being honest early, honest enough that ending, whatever it is, isn't a surprise. And I think that is just exceptional because I think this is going to get more and more relevant, that the companies that cut people early and move on, that can sort of achieve the vision and mission that you are set, are the ones that are going to win. And if you've got a personality thing that happens within you that makes you too scared to do it or unable to have those hard conversations or whatever, you are going to get left behind if you don't do some work on yourself to solve that.
I'm curious if this data plays true in Australia as well. Like I'm just thinking of Chris Skilling's data set. So this one goes from Q1 2023 to end of 2025. I'd be interested enough to hear it with the Aussie data.
Has something happened to Aaron's internet?
Why is that?
But you just asked about data in different queues.
Yeah, well, I was just going off because that chart's from him as well, isn't it? No?
What chart?
Weren't you just talking about the I may have totally misunderstood what the fuck we were talking about. Okay, no, the chart is gone. So I have no fucking idea what I'm talking about.
I'm like, I'm talking about firing people.
No. I thought, okay, all right.
So given there's no chart, does anybody have a comment on this? I think we now need to swing into a performance management conversation with our co-host here.
I'm always open to it.
Come on, Jack. What's the lesson for founders?
I like the post.
Good.
Good value. Good value.
I left nowhere for us to go after that one.
I have a question on hiring, if that's helpful.
Yes,
a
please.
Transition. So I'm currently hiring, and I put a job up on LinkedIn and posted it in a couple of Slack communities. And I've had applications from all over the world. We're a small new team. And now I'm in this like headset of I've got incredible talent globally wanting to apply. But then there's the friction of this job can be done remotely. But small new business, where do you place that ability to get in a room when needed? There will always be time zone overlap, but obviously sometimes more than others. Like I'm in this space of like, okay, do I settle for someone who's physically here that might be more junior that we're going to have to put more time into, or do we just go best elite global talent, figure out how to make it work?
Yeah, what I guess I've learnt towards is anchor more on, which talks to this post, the exit stuff. Like irrelevant of what I do, what am I going to measure? How am I going to know that the second I don't think this is working, I cut it, I learn from it, and I move on? Because even if you're the greatest hirer on earth, I don't think you can ever get better than maybe 60%, maybe 70%. But this idea that you're going to be able to nail it most of the time, I think is bullshit. And so I would say, irrelevant of where you go, concentrate on that first. Then in terms of that question that you're asking there, like one of the filters I think is very important is TEC or TEV, talent, experience, and values or culture. And generally try not to ever not hire for culture and values, hire for talent, because experience, depending on the role. Now, sometimes you have to have absolute experience. I'm just saying more often than not, people anchor on experience and ignore talent and cultural fit, only to get disappointed. And then you gotta look at the role very clearly and say, if I set this all up and I had the right person with the right talent and they're a cultural fit and we can solve for that stuff, could we build the experience of working remote? If all of the other ingredients fit, then I probably think you can give it a go, especially at your phase of the life cycle. But on the basis that if this isn't working, I'm going to cut real quick. But then sometimes we try and hire too quick. And if the role really needs to be next year because you're actually building something from scratch and you need to have those water cooler talks and it's just a pain in the ass to try and do it online, then don't. Mm-hmm. And there are roles it's like I can get together, give you instruction, touch base with you, but there's a lot of autonomous work. Like that's fine for remote. But if this is like teamwork and we've got to bounce off each other and we've got to iterate, then it's all too easy to put off the Zoom or put off the phone call or something else becomes important. And so
I mean, our team's already, although we're all in Adelaide, like we only physically go into an office and see each other maybe once every 2 weeks. So I feel, interesting. That's very helpful. Thank you, Dom.
Yeah, I'd anchor towards how do I know? And then one of the things I want to double click on where he talks about these check-ins, I had to remind myself of the value of leadership recently, just because there was a role in the FO that I just left to be a little bit autonomous, just let them sort of do their thing. And then little things crept up and I was too busy with tribe stuff to worry about it. And then I just let it go too far. And then frustration started to creep in. And yes, in the Australian laws, you've got to be careful. I'm not saying that you can't, but when you're paying someone a lot of money, you have different unfair dismissal issues. But we just sat down. I said, look, I have failed. I have not been giving proper feedback and accountability, but here's all of the things that have to stop today. And we just rattled through, and it was difficult, but they have rebounded 10 times better than what they even were when I considered them to be functional. And it was just a reminder to me that humans left alone without some guardrails and support and different things, like entropy is just a real thing. And if you're going to preside in a leadership role and you're going to take on a role on behalf of others, you've just got to accept that nobody can be left to be autonomous. And we as humans really do respond well to someone looking out for us to say, hey, regularly and early, this is not acceptable. Now, you can go down it and not be an asshole. So you can go down and crack the shits, or you can just do it, hey, this thing happened. Just tell me what you were thinking when you sent that message. And how have things gotten to that point that this has occurred? You can still do it with questions and curiosity so you don't become a dick. So hopefully they then reflect themselves and go, oh, fuck, hang on a minute. But yeah, that post here of Sam's really came together and reminded me of that, because I had abdicated my duty a bit on that particular role, just being busy with other things, probably ignored a few emails maybe. And that was a good lesson that I think is a reminder for everyone.
There is a great podcast that I recommend anyone in leadership going and listen to. I'm just re-listening to it. It came out just before end of year, called 10 Quintarian Leadership Truths Every Leader Needs to Hear. And it's Lenny's podcast interviewing Matt, who's now the CPO of Rippling, but he's kind of been one of the very early hires. And just some of the sound bites in terms of, like, as you were saying, Don, like that quick wake up call as someone in a leadership role, like, oh yeah, that's right. Like, you know it, but you just forget about it and it's not top of mind conscious. So very much recommend anyone in a leadership role have a little listen.
And my problem is I try and help founders with very systemic processes to actually systemize some of the stuff they do. And I think sometimes I fall out of connection with actually you need that plus good leadership, plus good human, interpersonal, emotional resilience, all that kind of stuff. Sometimes I can become too systemic and follow the bouncing ball. And sometimes you do need lessons to say, no, actually you need both.
The other thing I'd add to that, so Don, that example you gave was when there was like a course correction needed, but where I've made a mistake before is someone who is doing phenomenally well, and I tend to put them out of my mind and that give them free rein and not really be across what they were working on. Like I think of a CTO in one of my software ventures, phenomenal, but then without that constant contact and scrutiny, came back later to realize that they'd kind of taken things in a direction that wasn't really right for the business. So I think it can happen both when there's something adverse that maybe you just don't pull up, but also just this default assumption that, well, they're executing bloody well, they're a phenomenal talent, great resource, we're aligned on these things, therefore I can leave them unattended. It's like, no, even when the times are good, you've got to have this practice, like to your point, like that systemic approach.
Jack, Ash? Well, Sam mentioned that he used to work at Airwallex, which would have been an amazing breeding ground for learning a lot of this stuff. And so speaking of Airwallex, I'm going to put this under the heading of one of the greatest own goals I've seen in early stage venture for a while, is the article, Airwallex demands critical coverage be pulled as it considers its IPO. So this was an article in the AFR. It says, Airwallex is demanding the removal of critical media coverage about the payments unicorn, engaging a prominent Sydney law firm to threaten legal action and arguing leaked internal documents cannot be used in reporting. The Melbourne-founded, Singapore-headquartered company has hired Mark O'Brien Legal to demand the coverage be expunged as it heads for a well-flagged run at a multi-billion-dollar legal. Mark O'Brien, principal Paul Sullivan's. Anyway, the legal guy from the lawyer alleges 9 articles published over a 5-year period by the Australian Financial Review and the Sydney Morning Herald are based on leaked company documents and should be removed because they are an indefensible breach of confidence. What seems to be interesting is that they're more arguing that they shouldn't have been leaked rather than the content of them. But anyway, what I find really funny, it's a long article, is on Friday, an Airwallex spokesman said the letter that the lawyer had sent to the AFR and whatever was sent on a private and confidential and not for publication basis. We do not consent to your release of the content or anything in relation to this letter, including such a letter has been sent to you. To do so otherwise would be unethical. Fuck me. Have a laugh at that. Like, what did you really think that a journalist, like, for a start, and a journalist role is a journalist role. But this strikes me as so freaking naive. And then now nobody, like so few people would have actually known about the other stuff. Everyone's probably now going to go and have a look at, because you don't sort of behave like this if there aren't things to go and look at. And it's like you've got so much going on. If you're worried about some stuff that people might say about you, I can assure you shouldn't then become listed, because once you become listed, there's a little thing called short sellers, and shorts will come after you if they smell weakness. And if you can't handle what a journalist says that one of your ex-staff is claiming, this is astounding waste of energy. But I could be wrong.
I'm on the same page. It shouldn't become listed. I think it shouldn't become a founder. Like if you're doing something like this, there's going to be negative comments, criticisms. You're going to be hated by subsets. Like, it's part of it. And making it a thing is what makes it a thing. I best just leave it alone, or distraction, like use psychops or something. Like, but yeah, it's a bit comical.
Jack,
if it works, we can take them up for posting our website. Whoopsie, but
that's true.
Yes.
Yeah, because now what happens is the journalists smell a bit of blood and then they love it, because journalists need to write about stuff. So more articles are coming out. Like the Australian-founded payment startup Airwallex is offering to pay influencers to praise its billionaire chief executive as a thought leader as the company seeks to scrub negative media coverage. So, there's going to be more and more of this stuff coming in, but apparently they've now got evidence that someone in either marketing or legal or HR, whatever else, is trying to find well-known people to praise the CEO. And you just got to be careful with founders. Ego builds companies, but egos are very fragile. Like mine certainly is. And you just got to be so careful that you just watch out for that. It's like you are Airwallex. Look at what you are achieving, and to be so fragile,
Totally. It's like, don't be pro, right? Like they've sent this signal now where you can see journalists contacting staff members, like digging deeper, looking for little things. And there's no doubt going to be I don't want to say a flood, but there'll be more articles come out about different things now.
Especially Aussies. We've got this tall poppy syndrome, and we love to come after people that are behaving in contradictory manners. Anyway, my suggestion for people is concentrate on your business. And sometimes you can learn to say that you should never have anything negative said about you, or never see another person's worldview or on how your company is performing and some of the cultural challenges like that. That can be difficult as well, because if you're not careful, all of the energy goes internally and you fuck up and your company goes broke. And it was reported this week. No, this is actually a couple of weeks old now. Sendle, that was trying to do a merger with some other companies, or I think even completed the merger, has gone broke, which they called in the administrator, and a whole lot of people that had stuff ready to send with Sendle suddenly had to scramble for some other way to send it.
Or suckers like me that are waiting on a parcel that's sitting with Sendle somewhere and cannot get any single update on when, if ever, I will receive it.
So this article in Startup Daily says Sendle investors blindsided by closure. Federation, which was the biggest investor, in the frame. Several of Sendle's longtime backers are spitting chips and claiming they were blindsided by the board's decision to shut it down. The Australian Financial Review reported that Sendle, founded in 2014 by James Chin Moody, was shut down following a board vote on Saturday. You know things are difficult when your board's voting on shit on the weekend, by the way. And having been on many a weekend board call, those are not the companies that are finding it easy in life. Sendle told its customers on Sunday evening that it halted operations and cancelled all scheduled deliveries, but this came before its investors were informed. Federation, which holds a board seat, confirmed to this column that it held a briefing with its unit holders on Tuesday, 3 days after the closure, and a briefing in mid-December. Sydney-based Federation has been running point for the largest shareholder and board member, including providing a $12 million working capital facility soon after it merged with US-based startup into a new company called Fast Group. Now, I'll scroll forward. One of the most amazing things in this, Street Talk revealed in December that a staggering 64% of Federation's alternatives fund was invested in Fast Group, i.e. Sendle. According to the fund's fact sheet, it will hold between 10 and 20 companies. Well, if 64% of your fund is in one company and that company's gone now, there must be more to this. If you've got, there can't possibly be the end of the story that someone has invested 64% of their fund into one failing company. Like, that can't be true, can it?
I wouldn't have thought so. Be interesting to read their IM for the fund and what their investment plan was. That can't be right.
And then often what happens, people don't take into account sunk cost fallacy, and they invest money to save a previous investment. That's the biggest fuck up you can make in this game. You've always got to look at every dollar through the lens of, is this the best use of this dollar? And so it looks like they did another round late-ish last year, but the way they tried to protect themselves was with a liquidation preference of 8 times, 5 times? I can't find it here. But it was huge. And then it caused all sorts of other problems with all the other shareholders. Anytime I see a company starting to raise with ever increasing liquidation preferences, that is a company that is probably not going to survive.
Yeah, it was a 4 times the liquidation pref.
Yeah, I think they then say 8, but the existing shareholders disputed it. Yeah.
I'm just trying to add up the numbers in there. I wonder if it's maybe the journalist or the authors miss like 64% of the fund's asset value rather than capital invested, but it actually reads as 64% of the capital of the fund invested.
Now, a subsequent article came out by Bronwyn Clune of Capital Brief, who says the Sydney fund manager has accused an American company of misrepresenting its finances during due diligence before a merger with Sendle. The thing that I just want to pick out there is what Federation have said. Since the merger, it has emerged that ACI Logistics, who bought essentially Sendle through a roll-up, was not current on its financial obligations at the time of merger, contrary to representations made to Federation during due diligence. There's your problem. Now, at our early stage, due diligence, I think, matches the risk profile of the company. Like we do a range of things. At this stage here, to be relying on the representations and not having gone and checked, give me your bank statements. Give me your tax portals. Give me your creditor listing with the phone numbers so I can call the top 20 creditors to get from them the age listing. At this end of town, that's to be in representation territory and then to blame others. I think that's amateur hour.
I agree. And then looking at the other VCs in there, and there's some friends in there too, but the nature of our industry, there does tend to be the lead investor or the biggest shareholder tends to lead that DD. And then there is some laziness in others following and relying on that DD, even if they sign a I do not rely. And I think this is a real watch out for this shit to make it through. And look, we've talked about this before. Like, deliberate fraud can be hard to detect, totally. But some level of quality DD should have picked this up if they weren't current in their financial position.
One of my favorite movies is Enron, smartest guys in the room. Like, if you haven't seen that movie, Ash and Jack, like that is a fantastic movie that just highlights how massive fraud happens over multiple years. But one of the core things is the analysts had this thing, I'll ask Jeff Skilling. I don't know the answer to that. I'll ask Jeff. They never validated. And Jeff was willing to lie and willing to commit fraud. And it's you've got to inspect what you expect. And actually it's sort of like, I need to see it. If you're gonna deliver a fiduciary duty.
Yeah, 100%.
Well, that's a shame for all. But what is the Buffett quote? It was like, when a good manager meets a terrible business, the business's reputation always wins out. And I think when you have a look at that logistics thing, same with Milk Run, Like all the money that's been smashed in that space, intellectually, it makes sense. You should be able to do stuff with technology, but actually the unit economics and the complexities just makes it difficult.
Also such a watch out, like VCs where they've got that one company in their portfolio that has accrued massive uplift in valuation. But this game, you cannot count your chickens. Like it's, I did not expect Sendle to go. When I first saw the headline over the break, I actually thought it was a hoax or maybe just clickbait headline, but here we are.
All right, let's jump into some charts. Given we are running a little over time, and I've got a lot of emails to reply to and get back to, and then call Ash so she can help me become a more functional human being. I think now that I'm reflecting, Ash, what you're really helping me with is just because I can still get it done doesn't mean that I'm efficient and using my mental load correctly, and that you may be able to free up some of my mental load. Is that a positive way of me framing it?
Yes.
Now, speaking of positive mental load, here is the time horizon of software engineering tasks by different LLMs that can be completed 80% of the time. And it is just a J curve, as you could well imagine, up and to the right. And it's plotting going back to GPT 1, 2, 3, 3.5, 4. But we have hit the exponential stage, right? Like these new models are coming out. Now, the question becomes is, will it continue? And the money going into AI is banking on that it does. If this was to slow and start to flatten out and become more of an S curve, I think that would be the beginning of some corrections in this investment market. But all the experts, they seem to be telling us this is a very important one. This comes from Jack, who's obviously a Series C founder. This is a chart that shows the hairlines of different funding levels, starting at seed, going down to IPO. And this is almost like a midwhip. Seed funding, lots of hair. Series A, still there. Series B, we got the thinning. Series C, pretty well bald. But then pre-IPO, you got a bit of money for some advanced hair. Yeah. And then IPO, you're back to full hair plugs. Any comment on that, Jack?
Nah, I like it.
But Jack,
you go, Don.
Well, I would just say, given we're still raising our fund, like you're in the wrong zone, buddy.
I know. Venture, it's fucked.
Yeah, I've got so many grades in the last 4 years. But it is missing the post-IPO transformation of Bezos and Zuckerberg.
No, that's true. Now, here's a chart that plots, going back to 1973, the bull markets and bear markets. And just a reminder that it's always better for longer periods than it is worse. And the times that are better, it's a multiple of the times that it's worse. So on average, a bull market lasts 70 months. And on average, a bear market lasts only 14 months. And so you just got to be, it's time in the market rather than timing the market. Here's a chart that might explain a few things. This is millennials spend more time than past generations with their children. So this plots millennial, Gen X, baby boomer, and silent generation. Does this maybe explain the mental health epidemic, that this crop of parents spending more time with their children are creating more problems?
I think it just correlates to Jack not spending time watching TV at the moment. He's spending it with little Louis.
With his children. Well, that's mothers, and then this is fathers. So they're still... Mothers, like... It peaks at 30, and then if you're a mother over 30, I think you're like, fuck this, because it's like, nope.
See, I just jumped straight there. I just didn't need the...
You've jumped down there. So this is a chart going back to 1990. This is the college-educated job losses. So this is the share of the US unemployment that has 4-year degrees, and just have a look at how irrelevant 4-year degrees keep coming, especially in that environment where they get saddled with student debt. But like in 1995, less than 10% of people with a 4-year degree were unemployed. And that's now at all-time highs at just over 25%.
I'd like to see this broken down though by like 4-year degree in business, medical, like physio. Because they have so many liberal arts schools, you've got so many people graduating with like a degree in literature,
fashion,
and philosophy.
Yeah. No, I agree. This is a chart, and I think this speaks to some of the upheaval that's going to come if we're not careful. But this is a chart going back to 1850 of the percentage of wealth that the 0.00001% of Americans hold. In 1850, it was like 1%. And then the 1800s, just before the crash of like 1920 or so, it peaked at 4%. And then it fell until 1980, 1990. And then since 1990, it's been up and to the right. It's gone from 1% to 12%. And if we study history, unabashed or unabated wealth inequality leads to pitchforks. And it doesn't happen overnight, but it leads to people going, fuck this. I want a leader that doesn't look and smell like the establishment. And I want them to come in and break down some walls. And before you know it, you end up in a situation where you weren't expecting. Looking at you, United States. This is an interesting chart. So this is residential property prices for Australia, Canada, New Zealand, United States, and United Kingdom. Now, US and United Kingdom are still sort of growing. Australia is still growing up and to the right. I don't know about you, but it feels like the community as a whole in Australia thinks that property prices could never go down. I get a sense that nobody believes property prices could ever fall again. But have a look at Canada, who often we've been compared to, and have a look at New Zealand. They have had big contractions in their property prices. And could you imagine, with the amount of debt that's going into property and the amount of people that have bought property in, say, the last 2 years at the price levels that they've bought it at, if property fell 20%, given so many people buy with only a 20% deposit, and then they mentally felt that their equity was wiped out, could you imagine what that does to this country's psyche? Like, I think it's going to be pretty crazy. And given the top 1%, this is a chart that shows the top 10% of US earners account now for half of consumer spending. And it used to be the case that the bottom 80% amounted close to 50% of the spending. And now they're sort of 36%. Now the top 1% with their consumption in the US, which, like if you're in the top 10% of US earners, corporate jets, it's yachts, it's houses, it's cars, they consume like nobody's business. But we'll just end here. This is a chart of gold reserves in Japan, but you can actually plot this for a lot of other countries. A lot of other countries are buying the shit out of gold at the moment. And that sort of makes sense given what's happening geographically and the fact that the US has weaponized the US dollar, and the fact that a country can then fall under the control of essentially a dictator and demonstrate that their constitution means nothing if that person doesn't respect it. I'd be worried. And why do people buy gold? Well, this is a little picture that just shows 10 of these bars would have bought an average home in 1929, and 10 of these gold bars would buy you an average home today. Now, the gold price in 1929 was $35. Today, it's $4,000, whatever. And so that's why people do need to try and price assets, not so much in their currency sometimes. It's more in their purchasing power and other things, which is what I'm trying to teach my children at the moment. But it's a little bit difficult when they're 5 and 6, but we're getting there. But it is true, right? Like, you just have a look at the gold price. And then finally, given this has been very American-centric, a little bit of Donald Trump humor, Donald Trump has actually lost interest in Greenland after discovering not all islands are like Jeffrey Epstein's. Are you all staying on mute to leave me alone in what could be considered a bad taste joke?
Yes.
Where's the teamwork? Where's the support? All right, what are we looking forward to? Jack?
I don't even know what I'm doing this weekend yet. Haven't even thought about it, but I've got Louis, so probably just catch up with some mates, keep it pretty low key. Living the dream. Ash?
I fly to London on Saturday. So in the UK / Europe for 3 weeks, working remotely. Tyson, who you all know, has helped set me up with a desk in the Bureau's new London office, which is also the same co-working space as the AI Adopt Centre for the UK.
Awesome.
Really excited to, just be working remotely, get out of the Aussie bubble and bring back some new, fresh perspective.
That's great. Looking forward to it.
That's awesome. I'm looking forward to hopefully next week announcing publicly about some new funding in a program that we may have.
I tell you what, when I saw that message last night, one of the things I did reflect is that I don't think you can't say that we haven't tried to take our own medicine. We've taken some punches. We've tried to do what we can just to stay in the game, not get dead. And if you get pushed far enough, sometimes you do get a little bit of help. But well done, Aaron. You've spearheaded that, so absolutely hats off to you. And Jack and Ash, I know you're a key part of putting some of that stuff together. But you can't say we haven't been. You couldn't say we've just been handed an easy ride.
Fuck no.
I still, in my mind, there's been a couple of combos where, Jack, I can still hear your voice and everything go, you are joking.
Yeah, exactly. Yes. Well, anyway, hopefully we can publicly announce all that next week, including a new team member who has just signed their contract. So details to follow.
Great. I look forward to having a session with Ash, cleaning up my email. And I'll also be going out to the farm to do some slashing, which is a form of therapy. One quick question. With the new iOS update, are you guys going to be turning on the call screening feature?
Great. 100%.
I have it.
Now, you see,
I use it.
I'm stuck, right? I don't know. It feels arrogant.
Lean in.
Yeah, lean in. That feeling quickly goes away.
Does it?
It's great.
It's great. It is so good.
The only
awesome.
problem. So here's one of the things. Sometimes it takes me a little while to save people's numbers in my phone, and so when I start interacting with someone new, there's some, and so they're not in. I know that's them, so I'll pick up. I think I need to go and clean all that out, because imagine someone on the other end thinking that we now are like close and bonded and have a working relationship, and learning that their name is not in my phone in that kind of manner. That is an aggressive way to find out that you mean not that much to me, isn't it?
Tim is the exact same. He doesn't save people's numbers for like 3 years.
Yeah, I just know, like the guy that I've got doing my fencing, he's a good guy. Number ends in 319. Like, I like him. Just haven't got there. And often it's like, what do I call him? Like, it's like
Fence guy.
Tim Fencer, or fence guy. And so I'll do a clean out every now and then when my call list is just ridiculous because it's all numbers. But I think I have to do that first. Otherwise, it's just, I feel bad.
Honestly, if that's what's hurting people's feelings, come on, rub some dirt in it, pick yourself up.
Take some concrete tablets. We got bigger fish to fry.
Honestly, ain't got time for that.
Yeah.
Just turn it on.
It's a great feature.
Well, I'll know when my wife's upset with me. I'll get
your phone number's suddenly deleted.
All right, team. I'll catch you.
What are you looking forward to? Oh, yes, chatting with me. That's right.
You just wanted to hear it twice, Ash?
No, the internet actually cut out, so I actually didn't hear what he said. It just said chat, Ash, and then it came back, and I was like,
my problem.
Was nice.
Like, I do believe that I ultimately get there, but what my very bad habit is, because sometimes when you're multitasking, you get overwhelmed, is I'll be in a meeting and I'll see an email. I'll be in a meeting, I'll see a text. And my brain then goes, I got to get back to that. I got to get back to that. And then what happens is, like, life continues to go on, and then all of those things are no longer on the front page. And if I've got a busy few days, before you know it, now I'll ultimately get back there. But I think you're right. It's time for me to pull my socks up, because the worst is if it's with LPs or founders, does not cover us in glory. So yes, it is time. It is time for me to grow up, and I'm ready.
Yay! Woohoo!
The look on Jack's face is like, that's bullshit.
I've heard this before.
This isn't my first rodeo, he says.
Hence the bald head.
All right, see ya.
See you guys.